9:36 a.m. in London when we're doing this market update. My name is Alejandro Zambrano, and I'm the global chief market strategist with ATFX. I'm also the head of the site investingcube.com. We're going to talk about the markets. We're having the Nasdaq being down a bit this morning and a bit of a risk off following Apple's warning, that revenue warning last night. So we're going to talk a bit about that. We're of course going to cover all the main markets as well. There's some interesting stuff happening in gold today that is worthwhile keeping an eye on, and we could potentially start to see higher prices in gold if the price manages to take out an important level that I'm going to share with you guys in a few moments. Now, if you're totally new to this, don't forget you can subscribe to me on Twitter. You got my the link there to my page on Twitter, AlexFX00. That's my handle. As well, don't forget to subscribe to this channel here. We do this market update every day, pretty much around the same time, between 9:30 and 10 a.m. London time, where we spend about 15 minutes covering the world's markets and see if there's any interesting trading opportunities. Okay, so there's a lot to talk about Apple. We already have an article about this on the homepage. Probably going to provide more content on that a little bit later on as well. It's quite straightforward. They didn't really tell us how much less money they're going to make. But they did warn us that they're probably going to make less money. The reason for this is quite straightforward. In their latest guidance, they assumed that factories and stores and all of that will be back online on February 10th. It's now February 18th. And yesterday, they told us that most likely they're not going to be reaching their targets. And it's quite straightforward. A lot of the shops is not open, and then a lot of the factories are not working at full capacity. So they don't have products to ship necessarily. And right now, the way things are looking, if you look online, at least in the US, according to the Financial Times, you can still buy iPhones and things like that. But for example, the AirPods, the wireless headphones, apparently there's a 4-week delay in the US on that already. And it's not just here. There are, for example, people that would buy metal products and other products from China, and they are not very happy because they're not receiving their products on time. Other people don't want to buy them because fear of the coronavirus and that the products may contain the virus. So people worried about that. And then earlier, we already talked about, I think 2 weeks ago, that you got companies like Total that had issues with China because they did not want to take shipments of liquefied gas. And there's also issues with crude oil because the ports are not open or were not open in China, were not functioning as usual. And also because people are in their homes and not back at work, there's no huge demand for energy and all of this, energy for factories to produce things because they're not really producing anything. And then secondly, as well, the Chinese are not really consuming too much. So Moody's, which is the rating agency, they downgraded their expectations for GDP in China from 5.8 to I think it was 5.2, and that's as well is influencing the markets in a negative way. So that is really what's the talk of this morning. As for the coronavirus as well itself and the numbers, I think it was the head of the Wuhan hospital. He died of the virus last night, according to Chinese state TV. But what's interesting is actually the number of people getting the actual virus. It's all about the growth rate, and we're seeing less and less of that. On the other hand, in certain situations, with the cruiser outside of Tokyo, outside of Japan, I think there's like 450 people or so that now have the virus there because they're keeping them all on that ship, and I guess they're spreading it to each other. And then there's this other cruiser that I think they let that cruiser dock in Cambodia, and there was some 3,000 people or something on that ship, and one person had that virus, and now they're trying to track everyone down. So I personally think, because people are not going out and consuming so much in China, I think they will be able to stop the virus at one point. And hopefully we can do the rest in the rest of the world. But to be honest, some countries, like even here in the UK where I'm based, you could just walk straight in. They wouldn't check, they wouldn't do nothing. I understand if they didn't do that in the very, very beginning, but then, for example, I was in Hong Kong actually, and I arrived here in London on the 21st. So I understand by the 21st. I mean, because I was as an analyst, you kind of spend a lot of time looking into this stuff. I kind of knew already. I didn't knew already it was going to go this bad, but I knew it was getting bad. So maybe on the 21st, I mean, I understand when I landed that I didn't do any checks. But 3-4 days after that, when things are ramping up that much, obviously you would have put some checks in. But people haven't really done that everywhere. Now, I'm not a doctor, not a medical profession, but a specialist. But if you look at the situation with the SARS virus, we did a webinar on this on February 7th. I do think things will calm down, and I think we've probably seen the past of the actual virus. Now what we have ahead of us is things like bad economic data, and that could definitely dent the mood of the markets. And in some ideas, which I shared with you guys, I already said the New Zealand dollar is a sell, yen in various forms can be bought potentially, Aussie dollar is definitely a sell, and I want to stick with that. On the other hand, you have crude oil and things like that where I think maybe we can go upwards. So let's take a look now a bit more on the details, right? So Apple closed at 328 bucks, 324 bucks yesterday. And the pre-market level right now is that we're trading at 313. Now my chart has not updated here, but that would be meaning that we're trading here. That is some damage to the overall outlook for Apple, but it's not necessarily sufficient to kill the uptrend. To really sort of kill the uptrend, we need to trade below 302. Because you can see this is a big cluster of prices, and we're just going back into the midpoint of the cluster. What's going to happen maybe when we open? We might probably see a little bit more panic for a day or so, and then we'll see. I don't think it's going to bounce back up immediately, because what's going to happen is we're going to have some economic data coming out, and let's actually take a look at that. We should have had some European data already this morning. Let me just check. I'm looking at a different screen here. So at 10 o'clock in 15 minutes, we have the German CEW index, CEW, CEW. Now that's numbers for February. And the reason why the euro has been going down lately is because people think, or Credit Suisse thinks, that the Fed, not that the ECB might cut rates. I personally think if they want to achieve their 2% target, they still need to maybe cut rates or maybe do more QE. I personally think the 2% target is a little bit silly. But yeah, they think that we're going to see some weakness in these leading indicators. And maybe we'll have a proper recession in Germany, maybe. The CEW index coming out in exactly 15 minutes from now will share a bit more light on that. And it could easily be, you have February having a bit of bad data, and then by March, maybe hopefully the data starts to get back into normal again. So what can I say about this? Again, from average perspective, it's going to be a gap down here, and may trade a little bit lower, but as long as you trade about 301, then we're still dealing with an uptrend and we can still go upwards. And if that level does not hold, we can easily have more weakness, right? Are we going to tumble all the way down? I don't think so, unless we are heading into some recession and things really get bad. So I don't really foresee that. I mean, maybe we'll go down to 280 to 165, but I think from these levels, I mean that will be sufficient. That will be like a 17% drop. So yeah, I think that will be sufficient. So again, 301 is the target. As for the Nasdaq 100, this is the Nasdaq 100. So the American markets, by the way, were closed yesterday because of President's Day. So the market slid down to support. Now, this is an analysis I did before I knew they were going to give us a profit warning, because as you know, the market has been going up and up and up, and I've been bullish for most of the time. And what I do is that you sort of reduce the stop losses like that until we get really close to, because when the volatility changes, if you don't reduce the stop losses, you don't get a position. So what's happening here now is we're probably in that sort of situation where we can have a few days of sell-off because of this. So in the light of today's news, I wouldn't be buying the Nasdaq 100 here at these levels. If you think that this is a one-off, you think it's nonsense, you think we're going to bounce back up, well, keep an eye on 94.89. That's the trend defining level. And if you do think that this is going to turn more crazy, then maybe you should wait a bit. Maybe we should revisit this and maybe be bullish from slightly lower levels here. So you got those two options. My view is that we'll probably see slightly more weakness. Now, if what's the alternative then? Is there any way we can potentially take advantage of the current fear in the markets? Well, that will be probably the price of gold. So gold prices, as you know, they're trading within a range, and we are stuck in what's called ascending triangle. The different interpretations, I'm effectively ignoring that spike. So some people might say, well, no, this is not. This is some sort of a triangle. I see this as an ascending triangle, like that, and that little extra part should not be there. Anyway, the difference between this point here in the middle to the line here, that's a difference of $50. And on the break to the upside down, we should potentially have that. And not only that, if you look at it from a big picture perspective, we are in an uptrend. So why should we not be able to trade higher? And you remember when we had the break here at in June last year, I said we can reach 1,600. But you might remember I also said we have a target of 1,700. So we still haven't reached that 1,700 level, so I still think we have more to go. So this is what I will be watching. As for the dollar yen is holding up relatively well for now. I think it's because the dollar is being supported. Now, it's quite straightforward. You got support at 109.49, which is here. And again, if you think this is nonsense, it's all gonna blow over, then you work with that level there, and one can potentially buy where we are now and see if it goes upwards. The alternative, you wait for that break there, and if you're really bearish, then you're looking for the break here. But if you're really bearish, you're probably buying gold. You wouldn't necessarily be trading short dollar yen. For GBP USD, this is super easy. There's not much happening here. You had an attempt to break to the upside, then you had an attempt to break to the downside. Nothing happened. We did not have a move here in this market, so there's not too much to do. Neutral between 128.70 and 132.08, so I don't anticipate no change. And then you have the Euro USD, which is lingering around the lows. There's not too much activity here. We did highlight the sell here. We also said that we were gonna trigger a head and shoulders on the break here, actually. And if you're not in position, I understand that if selling here right now at these levels, it's not a good idea, I think, because we are let me see here, we are this is weird. We are 90 pip away from target, and we are actually 265 pip away from the major high. So risk reward ratio is not there. You can always, if you want to, flip to a 1 hour chart. In the 1 hour chart, you can get some small little patterns like that here. The break to the downside here. You have just a break to a low here, and then you have sort of the break to the low here as well. But it's really it's not difficult, but I don't get involved in this anymore. I used to trade this a lot, these small little setups. You can do it, but it can get really tiresome, the winning and losing. So I personally like to take on a position, hold that for a few days or sometimes a few weeks, and then grab whatever I get as well. When you're not micromanaging a trend and things like that, there's less risk for mistakes. I personally think so. Okay, let's see if you guys have any questions. Maurizio, good morning to you, sir. Thanks so much for joining us. We have Asu as well. What about your Swissy? And we have Rada as well saying hello, Alejandro, and we have True Merchant saying hi, guys. Good morning, guys. What about Euro Swissy? So let's take a look at Euro Swissy. I don't usually look at it that often. Okay, so this is Euro Swissy. So it continues to be in a downtrend. So you had the break here. This is a daily chart, or 6-hour chart. You had the break here. We're going down lower, and let's actually take a look at the weekly. So this is your weekly chart. So I wouldn't call this a pattern, but normally, according to normal trend line trend analysis, when you take out a low, you go to the next low. So the next low is a 102, so almost a parity. So that could be something to potentially work with, and to properly trade below that. I mean, last week we did that already, but we didn't have a close, and now it's trying to push lower again. I personally think it will probably trade lower. At least that is what the news flow is telling us. But it's not just that. The Swiss economy has always had a huge inflow of money, and that sort of more people genuinely just want more Swiss franc than euros. That's just it. And as long as the ECB keeps on printing money, then you know, effectively the central banks are flooding the market with money, about 20 billion every month. And as long as they keep on doing that, the level of the euro will go down. And as well, let's see here. What's the inflation in Switzerland? No, this is not correct. No, it is correct. Wow, it is correct. Inflation in Switzerland is 0.2%. So if you just leave your money there, the same money, you can use that to buy pretty much the same stuff 1 year later on. If you look at the US, no, let's forget about US. We're talking about the euro, right? So euro area inflation rate is a 1.4. So effectively, whatever you buy for groceries today, 1 year from now, not exactly, because this is the number from today's prices, well, actually January levels from January last year. So whatever you could use, if you had 100 euros last year and you bought a set amount of goods, you need to pay 100 and 1.4 now to buy the same amount. And if you look at longer term trends, if you look at relative inflation, they do explain why the Japanese currency and the Swiss franc is so strong. And that's something that's probably not going to change anytime soon. So from a trading perspective then, what can we do? Well, you have a smaller, this is interesting, I just saw this. So you have this, which is a bit of a descending triangle. Let me see if I can load it. There we go. You have that descending triangle, rectangle-like pattern. And it tells us we still have a bit more to go to the downside. And what could potentially be done here is, if it swings back up to something like 106.45, I think between this high and this high here and this high here, people are probably going to sell. I'm probably going to do something like that. Okay, that's it. Guys, unfortunately, it's almost 10 a.m. and I need to rush. I did not cover oil, but I did cover gold. Sorry about that. Let's cover oil, but then I need to rush. Okay, so this is crude oil. So you remember last week and the week before that, beginning of February, I said we could probably find a low here. So we're now in the second leg of the coronavirus, the coronavirus impacts on the world and the world economy. The first time that was crashed to 4, you get news about the whole thing, everybody sells, crude oil goes down with 15%. Okay. Now, because stock markets overall are quite bullish, the technical pattern here, if anything, is a sideways pattern, and you don't really have a big trend, not even in the big picture. Effectively, we're trading sideways between 42 and 77, and we lingered around the same levels since 2015 if we ignore this. So we don't have the trend here of, we have no real good trend here. So what this price is doing now is adjusting to that bad data, and we really don't know exactly how this is going to influence, but obviously it's going to be a bit bearish. So we're going down, and if we go down to the buy spot again, which is 50, 54, I still think people are going to be buying because I still think this could survive, and I will be bullish as long as you're about 48.93. But if we take out 48.93, then that's not a bad trade idea either, because we could, because of this is a big rectangle, we could potentially on the break here see this whole thing decline with about 23%. I don't really think that's going to happen. Maybe we'll go down to the low, so that's 13% of that's a bit different, so that may be something we can work with. So yeah, so no real change here to the outlook, but it's definitely going down. And let's just see if it goes all the way down to the buy spot again, because right now everybody's talking about Apple, everybody's a bit afraid. Nasdaq is very close to taking out the levels, but remember the same thing when we had with the coronavirus. We're trading down here and there was a little bit of panic in the air, but then the thing bounced. Maybe we'll do that again. And the technical tells us we shall remain bullish about 48.93. Okay, we're gonna wrap things up, guys. Okay, I'm stuck on euro dollar buying. Accounts want to liquidate. What would you do? The DAX. I forgot about the DAX as well. German DAX. So this is the DAX, and the market here is approaching that little buy spot here at 13,634. For now, the trend remains bullish, and as long as you're about 13,528, this will remain bullish. This could be an opportunity to get involved. I personally like gold most. I think it makes sense. You got the breakup. Hopefully, it goes with the news. This is a bit contrarian, and we're not really at an amazing buy level given the news. So I will give this another day at least to potentially get involved here if you want to, because you need that one day many times. Everybody reacts, everybody sells, and if the price is still above the levels on 24 hours later, then one can potentially look into it. Sometimes you miss out, of course, but nowadays the market has actually been quite forgiving. It does give you 24 hours or so to react. Okay, we're gonna wrap things up. We have a final question about the euro dollar. I'm stuck with euro dollar buy, and accounts an account is about to liquidate. What to do? There's no easy answers about this. In fact, I know I can't actually help you. I personally think selling euro dollar here, you know, I think this market could easily be up a bit, could easily be up 76 pip, but it could easily be down. I would definitely not buy because you don't trade against the trend. That's just the way it works. Unfortunately, there's no easy answers. You need to double check, you know, like, there's nothing wrong sometimes. Look at it like this. If the account is almost about to blow up, then leaving it on, you know, if you lost 90% of your money, you know, it's all about risk appetite. But say you lost 90% of your money, you know, and you have those 10% left, and if you leave it open, you might be able to get all your money back. Yeah. Then obviously you might as well maybe keep it open. It really depends on you though. If you're down, you know, 20% or even 50%, you still have 50% left, and that's quite a lot of money. And if you have 80, it's even more. And then sometimes, well, it is better to always bite the bullet. That's what I think, at least. I am very tight with stop loss orders. In 2006, when I started trading, I had a very good start in the beginning, 6 months or so. But then after that, I started to lose a bit of money, and pretty much gave back what I gained. And that's when I heard and read about the 1.5% risk per trade. So on every Forex trade from 2006, I had a maximum loss of 1.5%, and I stuck with that. And that's the number one thing that has kept me alive. The number one thing. As I was telling you earlier, last year was not such a good year. But this year, I traded a bit of cryptos. I made some decent profits and pretty much bought back a huge chunk of my losses in just 2-3 weeks. And the only reason why I'm still making money is because I'm very good at taking losses. I know this is not going to help you, but maybe the other stuff can help you. it is important to remember sometimes as well is that, you know, whatever money you have, you know, if it's money that could influence your life in a great way, then maybe you could take the bullet. Of course, it's up to you and everybody that is watching here. The key lesson from this: use some stop loss. Don't risk too much per trade unless you're happy to lose it all. All right, we're going to wrap things up. Guys, thanks so much for watching, and I'll see you guys tomorrow, same time. Thank you.